Hi there, I'm Amanda with the Davis team at Keller Williams, and today we're going to be tackling a big topic, common questions people ask when getting a loan. To help out, I'm joined by Carl Amerine with Envoy Mortgage.
Hi, I'm Carl Amerine with Envoy Mortgage. I've been in the mortgage business for almost 15 years now, and I've had the pleasure of working with Amanda and the Davis team for a little over 7 years.
We get a lot of questions about loans from buyers, so let's break down some of the common ones, starting with what are the different types of loans that people should know about?
Sure. So the four most common types of loans there, starting first would be a conventional loan. Conventional loans, probably the most flexible with the property type. They really favor strong credit scores. FHA loans, also very common, a little bit more restrictive. There's a government-backed loan on some property condition issues, but a little more forgiving and flexible on the credit qualifying and debt to income qualifying. VA loans, or the VA benefit, is for veterans. Also a government-backed loan, so same kind of restrictions on property, but very relaxed and very flexible to the benefit of the veteran on the credit and income qualifying. And then USDA loans, which is also a government-backed loan, designated for properties in more rural areas. A little bit trickier on the more strict on the credit and debt to income qualifying.
Okay, so how does someone qualify for a loan?
Sure. So, a loan gets funded based on, we'll call it like the 4 C's. So the most obvious thing here being the home or the collateral would be the first C. So, the home has to be, the collateral has to be of sufficient value to match the loan, and then adequate condition for the loan product. And the title work has to be satisfactory and ownership legally transferred. Capital being the borrower's their funds, whether that's funds for a down payment or financial reserves that are required for the loan product. That's money that they have through checking, savings, retirement accounts, brokerage accounts, money held in financial institutions that we can document. Credit, which is obviously a reflection of credit score, and then debts on the credit report, their credit history, those things. And then their capacity. So capacity is going to be their threshold for a monthly payment, a housing payment on what they can qualify for. So this looks at their debt to income ratio. This looks also at their employment and their income, making sure that that meets the guidelines for the program.
So you mentioned about government-backed loans. Can you go into more detail about what that means?
So, the conventional loans, maybe some common terms that people have heard, right, is like conventional loans. Those are basically written off guidelines for Fannie and Freddie. These are like your basic conforming loans, where the government-backed loans are going to be, like I said, FHA, VA, and USDA. There's government entities that are backing or insuring those loans, which basically they create the guidelines and the allowances for what those loans can do. And then that allows the lenders to offer these loans to buyers based on those parameters of them. So, as it being a government-backed program, they're going to have slightly different or maybe more strict or more relaxed guidelines or requirements depending on the program there.
Gotcha. And
Yeah.
also, depending on the house that you're buying, one program may be a better fit for the house you're purchasing versus another, right?
Exactly. Exactly. Yeah, 100%.
Tell me a little bit more about your credit score requirements with Envoy.
So our minimum credit score for any of our loan programs would be at a 580, depending on the program, right? It could be higher. And just because you have the minimum credit score requirement doesn't mean that you're necessarily going to be approved for the loan, right? But 580 is going to be the barrier to entry there for VA and for FHA. Conventional loans are going to require a minimum of a 620. We've got a lot of non-QM type things, which are, non-traditional or not conventional or not government-backed loans that have varying credit score requirements there as well. So, if you're looking at a buyer of their three pillars of credit, capital, and capacity, if one of those is struggling, then you probably need strengths in the other two, right? So if you've got low credit scores, but maybe you've got a good debt to income ratio, or you've got good financial reserves, right? It kind of offsets it, right? They can be forgiving of one, same thing, right? If you got a low down payment, but good credit scores, or ideally you want at least two of them to be pretty solid.
What about buyers that don't have enough money for down payment and closing costs?
There's a lot of great programs available for 100% financing. So obviously the VA loan and the USDA loan allow for 100% financing, meaning no down payment. Now, you still have to work the closing cost out. So either we negotiate the seller to pay for those or the buyer comes up with those. There's also many different down payment assistance programs, specific to the state of Texas. And then we've got some that are offered nationwide that help fund those down payments. And cover some of the closing costs sometimes as well. Fortunately, in this market, we're seeing a lot of opportunities for negotiating sellers paying those closing costs and people getting in with minimal investments. So a lot of strategies there.
Well, this has been so helpful. Thank you for breaking all this down.
And my pleasure. If you have any more questions, put them in the comments below or reach out to me directly. Love to hear what we can do to help.
Awesome. Don't forget to like this video, subscribe to our channel, hit the bell icon so you never miss out on future tips and advice. Stay connected with us on Facebook, Instagram, TikTok for updates on our team, listings, and our favorite spots in DFW. As always, we're here to help with all your real estate needs, whether you're buying, selling, or investing. Thanks for watching. See you soon. Bye.